Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. The story of this market is the story of three channels. An original mid-June to early September shallow bear channel, held up in late August at the important 38.2% absolute Fibonacci support below at 521, which ignited the bullish incentive enough to push up and out of the bear channel. The subsequent early September to mid-October bull channel that peaked with a V-top type formation in early to mid-October, and the most recent example, a dark blue highlighted mid-September to date bear channel that has been finessed a little, and which I acknowledge may be morphing into a possible descending expanding wedge pattern. That's currently 504 to 559, especially with prices forming an extension to the V-top over the end of October and the start of November. Three things to note. It's a story of threes, this one. Three things to now note. The September to October bull channel and the October to November bear channel come descending expanding wedge pattern together made the previously mentioned V-top pattern. The neck for such a pattern is approximately between the December 2020 low at 566 and the bright red neckline extension currently at 559 of the February to April reverse head and shoulders bottom. 3 weeks ago, and then again last week as well as this week, the market broke down through the bright red neckline extension and tried stabilizing below it and the whole V-top. However, so far it is having a hard time doing so, as the congestion at 545 from March and August as well as the September 2020 low at 540 have interfered with this, especially on a closing basis. I suspect the 38.2% absolute Fibonacci line at 521 might also be influencing this as well. Today the effort has been to press up against the combination of the bright red neckline extension and the dark blue upper bear channel line come descending wedge pattern. So far these have seemingly held. I also note a new late May to early October bearish shift pitchfork I've drawn today. The market is in between the overhead upper time currently at 588 and the middle time below currently at 515. Now the final thing to note is that 4 Fridays ago, the combination of the declining short moving average, the short medium moving average, which is 557, the short medium moving average, currently 587, and the very slowly declining long moving average, currently 589, all made a bow tie formation. Now, I'm the first to say that's not a great bow tie formation, as the moving average is in the wrong order, but that being said, it does look like a bow tie formation. Therefore, look to the immediate direction of the moving averages, principally lower, to show some guidance on the market, which we have seen. Plus, look now out for volatility 15 to 20 sessions after the crossover. So that is between the 29th of November and the 6th of December. Today is the last day of that period, and to be honest, there hasn't been that much of a show of volatility. Chicago corn. The green short medium moving average, currently 434, showed a significant support to this market back in mid-October, halting a decline and starting after initially being capped by the gold long moving average and conversely being helped up higher by the 50% absolute Fibonacci line at 425, starting a mid-October to end November bull channel. 4 weeks ago I said, and I quote, "The key question will be whether prices can attain the early October highs between 450 and 455, Or will the erosion of the bullish incentive by, for example, the gold long moving average or the November 2020 high at 439, whether this will be enough to prevent prices from trading higher? End of quote. Well, the 450 to 55 area topside capped the topside without even being tested, and prices have done a staircase dance of 2 steps down followed by 1 step up, etc, etc, etc. In more recent times, the green short medium moving average and the gold long moving average have become supportive last week and this week, but not to the level of earlier efforts as prices exited the bull channel on the downside 2 weeks ago. Interestingly, what has held the market up has been the 50% absolute Fibonacci line at 425, something to note for the future. Now, 2 weeks ago I said, and I quote, "Fully expect to see further pressure on the downside and even the development of an early October to date bearish flag halfway hesitation pattern, but nothing like this has happened. True, we are below the recent lower bull channel line, seemingly trailing along the underside of it, but we are still above the gold long moving average, which only had the single close below it, and well over the green short medium moving average and the 50% absolute Fibonacci line as well. To me, this means that the recent bull channel is not the dominant pattern here, and that another pattern is developing in the next few days, and I'll have to finesse this pattern or retire it completely. All very interesting." And that's the end of the quote. Well, since then, what I can see is that we have a new dark blue highlighted mid-May to early October bearish shift pitch. Not a perfect one, it's been tested more than once, including today, with the market today testing the upper time right now, and that's currently at 437, actually pushing up over the November 2020 higher at, where are we at, 439.5. I'll begin to watch the action here closely, as though this is not a great looking pitch fall, with the market only having the upper time being tested, it still nevertheless is still there. And we have been above it before with just a one single close and no consecutive closes. So I'm cautious about it until we get something much more substantial on the upside. Kansas City wheat. Much like Chicago wheat, this market is a story of 3 channels. The oldest and arguably the longest was the late June to very early September shallow bear channel that eventually ended up with a spike down flattened V bottom at the end of August. Secondly, there is the late August to mid-October bull channel that is eroded by both the slowly declining long moving average, currently at 598, and medium moving average, currently 578, as well as the interesting 38.2% Fibonacci line of the big old 2011-2019 move at 618. Finally, the most recent and the one that is still active is the dark blue highlighted early October to date bear channel, currently 510 to 558. Together with the earlier bull channel, these two formed a V-top of sorts with a small extension to the V pattern. And that's been based, interestingly, on the bright red lower trendline extension, currently 575, of the big old November 23 to April 24 descending triangle. That was support and is now resistance, possibly some principal resistance as well. Interestingly, the extension itself was due to a pattern I spoke about 10 weeks ago when I said, and I quote, "During February through to April, we saw the development of a rectangle pattern based on the 551 to 590 area. Please remember this area as it became relevant to more recent action." End of quote. This area was the origin of the original larger bear channel, which I'd previously mentioned right at the start. Anyway, we are now below the bright red trendline extension and still within the bear channel, if just, which I have finessed a little bit, I have to admit, though prices are still close to the upper bear channel line today. All this added further to what I said 4 weeks ago when I said, and I quote, "All this still leaves 2 potential targets below, the primary target X at 531 and the secondary target, harder to reach target X1, down at 527. These are the targets of the break below the middle bull channel, the late August to mid-October bull channel." End of quote. The market is still having trouble stabilizing below the 551 to 590 congestion from the rectangle pattern, but it is not over yet, and we have come very close this week with a low at 535 to both target X and target X1. So for the moment, those 2 targets below are still in the frame, as I suppose is the 38.2% absolute Fibonacci line at 533 and the late August low at 527, which will no doubt further interfere with any moves lower. I would finally note that I've drawn a new late May to very early October bearish shift pitch walk here today. prices are right now in between the overhead upper time, currently at 577, and the middle time below, currently at 502. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.